Welcome to Target Market Insights, the multifamily and marketing podcast. Each week, John Kasman interviews multifamily and marketing experts to teach you how to find the best places to invest, attract investors, and grow your portfolio. You are listening to Target Market Insights with your host, John Kasman.
Hey, welcome to Target Market Insights, the multifamily and marketing show. I'm your host, John Kasman, and we are doing something very special today. This is a solo episode. You know, if you listen to the show often, you know I don't normally do solo episodes, but I think the results of the presidential election certainly call for some solo thoughts. So I want to make sure that I get my thoughts out here, just share what I'm seeing in the world, my conversations with other investors, and see if it can help you make decisions both to close out 2020, but also as you're planning for 2021. First and foremost, as things stand right here, right now, as I'm recording this, Joe Biden is the president-elect. Now, we know that President Trump is fighting that, and he's looking into voter fraud. We will see how this plays out in the courts. But as of right now, Joe Biden is the president-elect. So I thought it would make sense to take a look at how Biden's policies may impact real estate investors. So today we're going to talk about what that looks like, the policies in particular that he's looking to address, and what that may mean for you as a real estate investor as you go forward into 2021. So first and foremost, if you go to joebiden.com/housing, make sure that's the right website, first of all. I was on here yesterday. Yep, joebiden.com/housing. He actually has his plan listed on that website. So don't just listen to me or anybody else who's just talking and telling you what's going to happen or what's not going to happen. Go to this website and you can actually read, his proposal for what he's looking to do in regards to real estate. Okay. With that said, the thing that jumps out to you on that website is he is really focused on creating more affordable housing. So affordable housing is something that's going to be one of the top of his priority. So if you are in the affordable housing space, this could be a great sign for you. Expect grants, expect, tax breaks, expect other things that can really spark affordable housing development. So that's a great space to be in. One of the things he's talks about on the website is that he's looking to help families pay no more than 30% of their income for rent. So I don't know if that means that he's going to give more vouchers. I don't know exactly what that means, but that could be good from that standpoint. The concern for most investors is on the flip side of that. If they try to put in rent caps, or try to put in some policies that stop you or prevent you from increasing rents, that could be a big challenge, right? So that's something to keep your eye on as you look at some of his policies. The next one along the same lines, there's a line on this website where he talks about helping residents with evictions. And I don't know how to read this, to be honest with you. So it says specifically that they're looking to protect tenants from eviction. And I'm just going to read this directly from the website, and I'll let you interpret this the way you see it. It says, housing evictions can have devastating consequences for families and often stem from relatively small shortfalls in rent. As a former public defender, Biden appreciates the difference legal representation can make for those facing eviction. As president, he will work to enact Majority Whip James E. Clyburn and Senator Michael Benner's Legal Assistance to Prevent Evictions Act of 2020, which will help tenants facing eviction access legal assistance. He also will encourage localities to create eviction diversion programs, including mediation, payment plans, and financial literacy education programs. Now, on one hand, I actually think that it's a lot of good that can be done here. If you are creating financial literacy programs and making it easier for people to actually pay rent, especially if we're talking small amounts here, that's good because most landlords, most property owners do not want to have to evict. Okay. Evictions are a last resort. I lived in Chicago the last 8 years, and most people in Chicago would rather do cash for keys than actually evict. So we would pay someone to leave a property. rather than evict them and go through the long process of an eviction. And every state, every jurisdiction is different. So some of these markets, you can go ahead, file an eviction, and essentially get a resident out within a couple weeks. But in Chicago, it takes months to go through that process. So I think the first thing that people have to understand is that an eviction truly is the last result for most property owners that I know. When you put a resident in a property, you recognize that you are giving them a home, and in turn, they're going to pay you a certain amount of money. And there's a contract, there's a written contract, that is there. So it's an exchange. And if someone is running short on their rent, the first thing you'd want to do is put together some sort of plan. Again, I'm speaking for most landlords that I know. Before you jump to, hey, you're $10 short, you got to get evicted. I think that most people would logically say, okay, how do we work with this? Okay, you don't have all the money right now. How do we make this, work? But if your situation changes, whether it's through COVID or anything else that happens, at a certain point, you can't allow that to continue to move forward, because now you're starting to hurt the the investor, and the investor may not be some big conglomerate. Most of the investors I know are mom and pop investors, people who are taking their hard-earned dollars and investing it in real estate to try to create a better future for themselves and for their family. Not these, greedy landlords who are truly walking around trying to rule everything. So with that in mind, there is a business expectation there. And I would be curious to see what proposals actually come. I have not looked into the California bill that's been talked about here. I do know a lot of landlords don't love it. So I'll be curious to see what exactly comes of that. Again, I'm all about providing more resources for residents. During the pandemic, that actually helped us. We had residents who were not going to be in a position to pay. We showed them the different resources that were available, from financial assistance, different programs, and they actually were able to come up with the missing rent and make the rent payment. So it was a win-win situation. So I'm all about helping people to pay and to stick to the contract and agreement that they have. But if this puts landlords in a bind where it's harder to run their business, then that's going to be problematic. So we'll see what happens there. The next thing that Biden has on his website that he talks about here is really ending some of these systemic challenges and practices that have made it harder for minorities, in particular African Americans, to own real estate and to grow their portfolios in real estate. One specifically here is to end redlining and other discriminatory practices that are in the housing market. So this is one that I certainly think would be great. I know a couple of people, in fact, who were victims of predatory loans, where just because of their name or their race, they received loans that were much higher interest rates than what their counterparts were receiving. So this practice actually still takes place, whether people know it or not. So ending something like that, I know my mortgage broker friend, so may not be happy to hear me say this, but I do think something like that has merit, and it should be an even playing field for everyone to go out and have the same opportunity. So there's something positive there that I think can come out of it. It would take to actually look into these practices to figure out how do you incorporate the right policies to end that, so it is truly an even playing field. But I look forward to seeing what he's able to come up with there. Now, most of my listeners, you guys are multifamily investors, and there are probably two huge things, three really, but three things that you really want to know about. The first is going to be the 1031 exchange. Now, this is something that was called out during the presidential campaign, and Biden specifically said he was going to end this. So this is one that absolutely should be on your radar, because the 1031 exchange has been around for over 100 years. And he is not the first president elect or the first candidate to say they were going to end the 1031 exchange. This has been going on for at least 20 years. To my knowledge, from talking to 1031 exchange professionals, they've told me this has been going on since the Clinton administration. So it's been talked about. I'm a little less concerned with this, simply because it has been talked about for so long, and that this is in place. And, even if Biden wanted to eliminate this, we still have a Republican Senate, at least as of now. We still have a Republican Senate. And I do think that this is one of those things that a lot of congressmen are not going to look to force, even probably on the Democratic side. I don't think you're going to have a whole lot of people who want to get rid of the 1031 exchange because it is such a powerful tool to create and preserve wealth. For those who are not familiar with what a 1031 exchange is and how it works, a 1031 exchange allows you to, instead of selling an asset that you own, you actually exchange it. So you sell it to a new person, but you're going to formally sell it to them, but you're really exchanging it. So instead of you selling it, you get your money and then you go buy something else. It's actually, you have a short window of time to identify a new property. You're exchanging it. So you're rolling over the equity you have in this asset into a new asset. The best way I could describe it is think of like a 401k. Okay. Let's say you switch jobs. So you're going to roll over your old 401k into your new plan. It's a similar concept. You're going to be rolling over the equity from the previous asset that you had into a new asset that is of equal or greater value. And because you didn't actually sell it, you didn't take any money, you didn't put it in your pocket, you never realized the benefits of a sale. The capital gain is actually deferred. So that tax is deferred. You're not paying any tax at that moment. Just like with a retirement account, you're not going to pay a tax for a distribution because you actually didn't take a distribution. You rolled it from this account to that account. It's the same concept. So a lot of investors love that. It's a great way to continue to investing. I believe that it gives newer investors an opportunity to get into deals that maybe they couldn't get into because you have more people who are looking to trade up. If those folks don't trade up when the market gets hot like it is right now, they're not incentivized to sell. If you've had a property for 10 years and you've made $1 million of equity, if you sell, you now have to pay 15% capital gains tax. That's $150,000 on that $1 million of equity. So you're going to lose $150,000. Most investors are savvy enough to say, well, why don't I just keep it and not have to worry about the tax at all? And that's what they'll do. They'll just keep it. If it's a great cash flowing asset, they'll keep it and they will, just continue to operate. And that doesn't give a chance for um, contractors, insurance agents, brokers, um, title companies, all these people that are involved in a transaction that keeps the economy moving when a transaction takes place, they don't get any business here. So if that transaction volume drops, it's going to lower the economy. It's going to really take a hit because most people are going to sit there and think about it. Who are the people who've had the properties for 10, 20, 30 years? It's the older investor. So the newer generation, which is more diverse, which is really growing and at the early stages of trying to create wealth, they're not going to get those same opportunities. So I'm really concerned with this one just because I do think that it will stymie the growth that we've seen in the real estate industry. And I really think it's going to hurt the opportunities for a younger, diverse investor to get in the game where, if you look back historically, it's been mostly uh, an older investor who's been there. So I look forward to seeing what happens, but I'm really concerned with the threats of the 1031 exchange. I really hope that that's more campaign rhetoric. And once they get in office and think through things, this is not something that's a high priority and actually does not get implemented. Here's the follow up to that. There's something that's called a step up basis. Okay. And a step up basis is essentially why the 1031 exchange is like so phenomenal. And what it basically means is, let's say I have my real estate portfolio. When I pass away, I leave it to my kids. When that happens, my kids do not have to pay the capital gains tax on all the equity I've created over the life of me holding this real estate. They start paying from day one that they get it. So if they get a portfolio that's now worth, let's say $10 million, they get a $10 million portfolio. They are now only going to pay capital gains tax on anything above and beyond the $10 million of that portfolio. So if they then hold it and take it to a $15 million portfolio, they only pay capital gains tax on $5 million. Let's say I created this portfolio at $1 million, and it started at one and I grew it to 10. Well, there's $9 million of capital gains tax that could be there. My kids won't have to pay that today, based on today's policy. They would inherit at the $10 million mark and they just have to worry about 10 million and up. If this step up basis gets eliminated, and this is independent of the 1031 exchange, right? Because if I buy a house and I hold it for 30 years, I never exchange it, but I gift it to my kids, it's the same concept. So if that's the case, two things happen. One, more than likely, very few of these heirs are going to be in a position to actually pay that capital gains tax if that step up basis gets eliminated. If I give you a property that you weren't expecting, and by the way, the first thing you have to do is pay $150,000 of taxes on it, you're probably just going to sell it, right? You're like, dude, I don't have this. I didn't have the money laying around, or it needs to come out of the property somehow. So if it's not a cash flowing asset or it's not kicking off that kind of capital, you may have a lot of people who aren't looking to pay that. So I really do think the step up basis is challenging. It's really going to hurt the preservation of wealth. And I think it would really make real estate a little less attractive as a long term wealth creation vehicle, which it's been for as long as anyone can remember. So that's a policy that, again, we'll keep our eye on for younger generations, more diverse generations. It's a great tool to create wealth for us. And I think the elimination of it really hurts that younger, more diverse investor in their avenues and pathways to create wealth for their family. I understand that it allows you to create more taxes and do things there, but the reality is it's going to hurt most people in their wealth creation. So that's a policy that, again, I'm a little curious about it and not quite sure what the rationale is to just tax that and especially for people who are really unassuming. I mean, because this would impact most people. I'm not sure if there's a cutoff or if it's only going to be for a certain age group, or a certain income bracket. But nonetheless, if you're trying to create wealth and pass that wealth on to generations, that step up basis is a really key component of it. So there's certainly strategies around it, but just the proposal to eliminate that, I think, is concerning for real estate investors. Now, with that said, I do want to say that, again, we have a Republican Senate. So it is not clear what policies can actually get passed. Clearly, the president-elect has different priorities right now between COVID and, trying to get the economy going and things like that. So don't expect these to be immediate things that get implemented. And I believe he will see a lot of pushback if he goes too hard on some of these policies. I think some of the housing things are great with the affordable housing, but the elimination of some of these benefits for real estate investors could become problematic. Now, the last one that I think is really important I want to talk about is bonus depreciation. Now, bonus depreciation allows you to fast forward the depreciation of an asset. And this is for any business, not just real estate. So this is a tool that investors love. More recently, with Trump's last tax reform, he allowed investors to accelerate that bonus depreciation for the first year of ownership. So you can now take a huge amount of bonus depreciation all in year one. And that really makes it a strong vehicle for tax write-offs and to reduce your tax obligation. So over the last few years, that has been a really strong driver to keeping the real estate industry going, but also for a lot of businesses and to create more income and to generate more wealth. So that's one that I do think is on the chopping block because that bonus depreciation, specifically the accelerated depreciation, that expires, I believe, in 2021 or 2022. So that actually is set to expire, and that will probably be harder to renew. So unlike the other ones where you'd have to actually implement a new policy, with this one, you just have to not renew it. So that's one that you may see go away. So you may ask yourself as an investor, what do you do with everything I just said? Well, starting backwards with the bonus depreciation, now's a great time to go ahead and take that bonus depreciation for any assets that you have. If that gets eliminated, you will want to make sure that as you're investing, maybe you're adjusting, especially if you were doing so just for the tax benefits. Prior to, I want to say 2017, that really wasn't there. So you saw that maybe that bonus depreciation really helped to accelerate things over the last few months. So take advantage of it as you go into 2021. Take advantage of deals, take advantage of real estate, get into bonus depreciation, and try to take advantage of it the best you can while it's still available. If and when it does expire, there will still be depreciation opportunities there. It just won't be all accelerated at the same level that it was. So previously you can invest in a deal and almost take a portion of your investment and expect to get that back as a bonus depreciation write-off or a K1 loss. So you're actually showing a loss on your investment even though you're getting a profitable return. That's probably not going to be the same case as we go forward. So that's something you want to look at and maybe focus on building your portfolio over the next year or so. It's a great time to invest to continue to take advantage of those things, recognizing that that benefit may expire. In regards to the 1031 exchange, I would just keep my eye on it. See what recommendations are being made, if there are any policies that are being proposed, and if you feel like there's an asset that you want to exchange, you got to give yourself some time because that process takes anywhere up to 6 months to actually exchange an asset. So you don't want to wait too late because if you wait, you may not be able to find and complete that exchange or the rollover, if you will, in time before the new policy kicks in. So definitely keep your eye on it. I don't think you have to react right away or try to do a 1031 exchange right away or anything like that. But pay attention to the policies. If you want a great tip to pay attention, set a Google alert. Set a Google alert for 1031 exchange. And you might even do Biden 1031 exchange. And that way you can get updates immediately if there's any proposal that comes out. Outside of that, again, if you're in the affordable housing space or you're in the lending space, you can definitely keep an eye on some of the proposed changes that are coming. There's a lot of money, I believe. On Biden's website, he says they are establishing a $100 billion affordable housing fund to construct and upgrade affordable housing. So he is really focused on trying to create better housing stock. I'm not sure if this is grants that are going to be available for developers. But again, folks in that space, I think there's going to be some great opportunities for you, for anyone who's developing in community businesses. And he's also looking to ensure minority-owned businesses benefit from investments in housing construction and repair. So this is something that could be a great opportunity for those minority-owned businesses in this space. So pay attention, take advantage of these options that are there. But again, for more of my multifamily investors, I think the biggest thing is just understanding the evictions and some of these other policies. So not the news that many real estate investors were hoping for, but overall, I think there's some things here that work. And I would say back to sometimes on a campaign trail, you just have to draw contrast between your opponent. And I really do hope that some of the language and some of the things there were more just talk, and some of the policies, in particular, the 1031 exchange and the step up basis. I do hope that those remain untouched because those have been great vehicles for years, for decades for investors. So we'd hate to see those things changed and, really hurting the opportunities for newer investors to get in and create wealth for their families. So with that said, we all often do not do these solo episodes, but with people, with the year winding down and people trying to make money moves to close out 2020 and prepare for what 2021 has in store, I thought it was really good just to talk about what I'm hearing from other investors, what I'm seeing, what I'm reading, and how a Biden-elect presidency could impact you as a real estate investor. If you have any questions or want to comment, I'd love to hear from you. You can shoot me an email at john@casmancapital.com. And as you know, we have a sample deal on our website. Just go to casmancapital.com/sample deal. You can download that. You get great tips from us, and we'd love to talk to you and stay in touch. Until next time, take care.